Good morning, everyone, and welcome to TBR's webcast, Software Business Quarterly Review webcast, delving into the recent results of TBR's Software Vendor Reports and Software Business Benchmark Report. I'm Allison Crawford, and I'll be hosting today's webinar. As we kick off 2014, we're looking forward to continuing our quarterly webinar series, providing you with business insight into the state of the software market. Before I pass it over to Matt and Elizabeth, there are a few housekeeping items I'd like to cover. First, we'll be recording today's session and posting it on our YouTube site, TBRI channel. We encourage you to visit our channel to watch this presentation or any of the others that we've posted. Second, we'd like to hear your opinions and thoughts on the materials we're presenting. Please send any questions or comments to the Q&A or chat function. Matt and Elizabeth will address them at the end of the presentation, or if you'd like to set up a client inquiry for more detailed discussion, please reach out directly to either analyst at the end of the webinar to set up that conversation. Third, we'll send out the slides to everyone registered for today's webcast within 24 hours of the conclusion of the webinar. You can also find these slides, as well as other thought leadership pieces, webinar decks, and commentaries on SlideShare at www.slideshare.net/TBR_market_insight, and we'll share all the social media links with you again at the end of the presentation. Now let me introduce Matt Healey and Elizabeth Hedstrom. Elizabeth is our lead analyst covering enterprise software and has been working closely with the vendors covered in the report to understand their business models and strategies. Matt has over 15 years of experience in global software and services research and leads our software research program. Their expertise and perspective is bringing unequaled value to clients of their research. And with that, let me hand this over to Matt.
Excellent. Thank you, Allison. And I want to start with just a brief overview. Elizabeth is going to be taking the lion's share of this. I'm basically here to tee it up and give an overview of what's going on in the market. And so I will be passing this webinar over to her very shortly. But I want to start by saying that we all like to think of our markets and what we're looking at in isolation and what's going on with the software market or the IT market, but it's important to realize that none of these markets exist in a vacuum, and so what's going on in the infrastructure and application software is affected by what's going on in the broader IT market, and it's also affected by what's going on in the broader economy, globally. So what I see happening, and this webinar and the results here were from the Q3 time period, but over the last couple weeks it's becoming increasingly apparent that I think 2014 is going to be a tale of diverging economies, in which you're looking at some of the developed economies becoming a lot stronger and really beginning to see some growth in there. I'm pointing in the United States to the Fed decision to taper their bond buying program and come to an end on their infinite quantitative easing. In general, I kind of trust that the Federal Reserve Board wouldn't be tapering if they didn't feel like the U.S. economy was getting stronger. And as the largest economy in the world and really a bellwether of a lot of the developed markets, I think you're beginning to see that across the board. So I think you're beginning to see some real strength out of the developed markets. Emerging markets, on the other hand, might be having some problems. We did see some disappointing numbers out of China in terms of their manufacturing numbers, and that kind of caused somewhat of a skid, shall we say, on Thursday and Friday of last week in the major market averages. So I think against that backdrop, what you can see is there's going to be some changes in some of the software and some of the applications go-to-markets over the next 12 months. Because in general, when you look at developed markets, these are the countries that tend to have a more mature buying process. They tend to have a lot of horizontal applications already installed, and so they're looking for incremental value, whether that's the integration of BI and analytics, more cloud deployments, and they tend to be a little bit further up. When you start looking at the very nascent emerging markets, they're still building out some of these areas, so you tend to see much more infrastructure software buys in those areas. And if you look at the road a country goes on from emerging all the way up to developed, there are definite phases, and a lot of the emerging markets tend to be much closer to the infrastructure buys, at least in the early phases of that maturity model. So I think that going forward, you may see really some good times ahead for some of the applications in terms of the growth there, whereas some of the infrastructure players, maybe not so much. But please keep in mind that the results of this benchmark were from Q3 when that story wasn't fully developed. And so that's kind of my perspective going forward. Now with that, I really want to introduce to you Elizabeth, who can go through, the nuts and bolts of what's going on and really understands everything in this. So Elizabeth?
Thanks, Matt.
I like to set the bar high for the people here at TBR because I really think, Elizabeth is a very good analyst.
Oh, thanks, Matt. He and I have a lot of fun on these webinars, in case you can't tell. So what we're going to take you through is a two-pronged approach to this market. And the great thing about when we're looking at the enterprise software space is that we look at point-in-time results, but they really are a bellwether of what's coming, both in the near and long term. So jumping right into the benchmark statistics, we've got a real look at where folks are going. And I think the key takeaway for those of you that joined us last quarter, and for those of you that won't, I'll recap briefly. We had a great split last quarter when we looked at the leaders, and to orient you to the graph, average annual revenue growth on the vertical axis, 3Q13 year-to-year revenue growth on the horizontal axis, with the green lines being the averages between them, and that's what defines our quadrants of opportunity. Where the leaders last quarter were all applications vendors without exception. Now you're really looking at the infrastructure players coming into their own and into focus. And that's, to Matt's point, that's really where we see a lot of 2014 bellwethers already moving into gear. Customers have spent a lot of time around their applications. They're still looking for efficiencies there, but the incremental loosening of spend means that there is still a line of business-led focus on cost efficiency and cost management, and that's where additional accretive spend in infrastructure, as well as targeted points of evaluation of industry-specific applications, immediate, real point of value around the business, are going to be the drivers of growth going forward. So that trusted advisor position, we've talked about this in the past, it really comes down to how a vendor can ensure that their customers stay loyal, that their partners stay engaged, and that they defend their install bases from competitive threat. Because in a world where top-line revenue growth continues to lag relative to past performance, you've got to find growth any way you can get it. And customers know, by the way, that they're in a buyer's market. The folks that we've talked to, they've really become very savvy on what they need, when they need it, and they're very willing to talk to many people to get there. So from overall revenue to license revenue, we're talking about the enterprise software landscape. Let's go a little bit deeper on the actual story of license sales. And it is really a tale of two cities when you look at the gap between the leaders quadrant as well as those that are chasing the average. And I'll point out to you that the significant acquired growth that Dell Enterprise Software continues to monetize, it's what happens when you bring an entire business in and eat it whole, has been pulling up the overall average for this benchmark and probably will for another quarter or two. But looking at these distinct vendors, they are very much able to tell a very simple, targeted message of business value for customers. So it's very much a case of how do you pivot what you have to most tightly align to customers' needs. And folks like Tableau, Dell Enterprise Software, Informatica, all looking at data management. And we've talked about, and I think with a number of you on the phone, we've talked about our business intelligence software vendor benchmark, so I'll borrow a little bit of that story right now because it does apply. Data growth continues to be a point of concern not only for IT, but for line of business executives, and these vendors are really pivoting very simple tools that play in heterogeneous deployments to drive very real year-to-year growth. Now, it's also worth noting that a number of these vendors had a pretty lousy year in 2012, so there's something to be said for a bad comparable driving a good performance. But the other points to note here, Progress Software, very specifically focused around how do you retrench, retool your portfolio, and really get close to your supply chain management roots. And we see that finally driving growth for them. They've been lagging for a number of quarters for us. And then Commvault, Microsoft, VMware. Backup, applications, and infrastructure. If I look at those three vendors together, I would say that it remains a very interesting opportunity for those vendors that are tied closest to their channel to keep that growth moving by sustaining channel incentives and channel engagement, and we'll talk about that for a little while. Now, when we look at the lagging category, and again, I will point out that metric is, I would say, a little bit deceptive, but what I would say is in terms of those vendors that are chasing Microsoft, chasing VMware, every single one of them without exception, including IBM software, including Oracle, including SAP, including Citrix, are really looking at how do you continue to monetize and deepen the engagement with your channel partners, and I don't expect that gap to be that broad for very long, particularly when you look at Oracle and SAP and their work around how do you get cloud channel sales galvanized. I expect to see that motion within a quarter. So we talked about revenue growth. Now we're going to talk about profitable revenue growth. And we hinted at the channel story a moment ago, but this is really where it comes into focus. Microsoft is the juggernaut in this space, and when you get 80, 90% of your revenue from the channel, that's what happens. VMware, by the way, in terms of scale of share from the channel, not far behind them. SAP, very much moving closer to that gap, and that's where, again, you already see this gap starting to close when you take margin into effect. The large enterprise software players know how to run an efficient business, and they've been very proactive, Oracle, IBM especially, in really looking at how do you integrate and monetize acquisitions. So portfolio-led growth, rapid deployment of those offerings, how do you monetize something in 90 days or less after purchase, and how do you maximize simultaneously what you can gain through your channel partners in the mid-market. We expect the mid-market to be a battle of contention across 2014, and we'll talk about that in a little while. Now, I want to point out Informatica and Tableau, again, really topping out on the corporate revenue growth side of the scale relative to other vendors. And even though they are chasing in terms of margin performance, which we see on the horizontal axis, this is a model that internally we colloquially call the Salesforce model. We're not the only ones that do it, I know that, but it continues to make it very easy for our clients to understand that how do you invest for growth? You spend on sales and marketing, you spend on R&D. It's about grow that install base as fast as you can by any means necessary. And we see a lot of the recently IPO'd vendors, including Tableau, moving towards that model. So in the middle of this benchmark, what we like to do is we like to pivot from a coverage of the benchmark in terms of a point-in-time look at the market as it stands to where we see the vendors moving. And for, as many of you know, we're really looking at not just the leaders in this market as well as the disruptors, but then targeted coverage of vendors in that segment. And so we see a real move towards an IBM model of attacking an outcome-based buyer. How do you satisfy your IT loyalists as well as their line of business management to protect your license revenue stream as well as support your own corporate transformations? How do you then move to ensuring that those end users, those core evangelists, are able to access and manipulate your information without having to look outside your own portfolio for help unless you want them there? And then finally, solutions integration, streamlined execution. How do you as a vendor in this space keep your sales simple, keep your outreach consistent, and keep your solutions predictable to defend from competitive threats? So we'll start with line of business outreach. When we look at the line of business buyer, and this is something that we've seen not only in our vendor reports, but also in our recent Source IT publications, we're really seeing a push for simplified functionality. And in many cases, you're looking at the manifestation of a story that a number of vendors have anticipated, partially from bad experiences. Matt's been in this chair a lot longer than me. I think he remembers full well the bumpy road of ERP and CRM installations rewind back 5-10 years ago. But that really, I think, taught a lot of the leaders in this market a lot of lessons very early and have positioned them to be ready for the influx of line of business constituencies in the purchasing process. So how do you tell and deliver a simple story? That's where you see real movement towards deal closures in 2014. We called out IBM software here as a case example within our coverage opportunities, but it's not only IBM software, it's HP software looking at how to tie software to the converged infrastructure story. It's Dell software trying to craft a centralized point of management as the lever for a very, I'll say, diverse software portfolio to come together in support of the broader solution base. And I think every one of our 11 vendors that we cover could really fit into this category. You're taking a world of point products, you're trying to tie them together into a solution that not only makes sense for deployment, but makes sense for a C-suite narrative. And there's a sales so what in this as well, because it really comes down to how can vendors move up the command chain in their own customer environments, how can the sales teams come closer to the C-suite, and in doing that, really own that relationship from stem to stern. When we look at line of business, then we go to end user experience, and it's interesting because we're watching the story of mobility really start to change its own definition. When we see, at least within the software practice, a discussion of mobility, we're really finding that it's being driven by applications vendors, and it's not about mobile deployment, mobile opportunity. It's about information. It's about how can vendors take what they do well and really make sure that they can take it from the data center all the way to the device. And this is spanning any number of people that we cover, from the applications vendors now all the way up to VMware's recent acquisition of AirWatch of last week, which had a price point comparable to their acquisition of Nicira in excess of $1 billion. It goes to show you that it's about control, it's about visibility, and it's about simplicity of management and orchestration. And this is a case of keeping vendor relevance, as we talked about in the benchmark itself. It's really where these vendors can take a cloud story that is starting to mature, a mobile story that is starting to come into focus, and rapidly boil it together around what it means for core business value for both themselves and for the customers in question. It's about the right information in the right context. So taking this consumer-driven idea, this end-user-initiated task idea, and really migrating it into moving beyond shadow IT and creating a story around application extension, desktop virtualization extension, we see this as an opportunity for not only the applications to go end-to-end, but for the story of software-defined networking to finally come into its own around that path from the data center to the device and then outside the data center into the network, so forwards and backwards. We called out Microsoft and Citrix here. I think it's also worth noting SAP's purchases of Sybase and Cyclo as a path to application development around mobility, thinking about everything mobile first. Candidly, I think a lot of the cloud vendors are only just now starting to chase the idea of mobile first, but in the end, it's all about the application. Or in the case of the infrastructure vendors now moving into this segment, all about the desktop, the endpoint, creating that clear, seamless path from beginning to delivery endpoint. And then moving into solutions integration. I think operationally we've talked about this for a number of quarters. When you're dealing, I'll bring out my favorite Larry Ellison quote from Open World 2012. I think some of you have heard me say this before. but when he talked about the Sun acquisition back in 2012, he made reference to the fact that it takes time to turn a battleship. And when we look at especially the leaders in this benchmark, as well as some of the larger disruptors, including folks like SAS, these are companies that are decades in the building. And in that world, you create silos upon silos, and it's really a case of how do you, looking top-down at an organization that in Oracle and IBM's case has more employees than some countries have citizens, how do you take that very large organization and create agility in execution as well as development? So Microsoft and SAP really are, I think, kind of two ends of the same spectrum here. Microsoft is chasing opportunity and SAP is anticipating it. When we look at Microsoft and the, I'll call it market lag that they've been experiencing thanks to their very public deliberations about their next CEO, Microsoft is really trying to take its corporate reorganization down to a very tactical level and craft initiatives that operational, being both general and administrative as well as development groups, as well as support groups in terms of product support and sales and marketing, can align around to accelerate and streamline internal deployments. And we see this as a very timely move for them to take some momentum and build it into current offerings, especially around the rapidly growing adoption base for Microsoft Azure and Office 365. Now, SAP, on the other hand, in SAP, we can't really tell this story without bringing Oracle into the picture. Oracle and SAP, I think, are very much engaged in the battle of the titans, and candidly, as the lead analyst for both Oracle and SAP, it makes it very exciting for me to watch, because we're watching two companies that know each other very well in the market, that have battled each other for a long time in the market, taking two very different tacks to finding their next act. Oracle is doubling down on sales and marketing. It's what's always worked for them, especially around sales execution. I'd never want to bet against Oracle in terms of its direct sales team finally righting what's been a relatively shaky ship in terms of growth for the last 18 months. And then at the other end of the spectrum, you have SAP really taking a look at what its problems have been in the past and trying to basically rip itself apart and rebuild a new company that has a more centralized point of build, brand, and sell, as well as partner engagement. So the expansions of SAP Business Suite powered by SAP HANA, as well as the consolidation of its on- and off-premise development teams into a single organization under Executive Board member Dr. Vishal Sikka, show that SAP is understanding what it takes to become, as they've branded themselves, a cloud company powered by SAP HANA. It's changing the entire pipeline of how the company is built and sold, and it's a journey that's going to take them some time, but it's a journey they're clearly committed to, not only from an executive branding perspective, but from a very specific, ready to put their money where their positioning is perspective. So I've been asked by executives on both sides of those houses who I think is going to come out ahead. Candidly, stay tuned, because at this point it's neck and neck, and I can't even begin to tell you where the final tipping point is going to come. I think it's going to be a lot of back and forth in 2014. But I'll also tell you that I think that creates some real opportunities for folks at IBM, for folks at Microsoft, and for some disruptive pure plays in the business intelligence and cloud spaces to really start looking at opportunities. It doesn't take a lot of either the Oracle or SAP install base to make a Tableau very happy. So for our friends from Oracle and SAP that are on the phone, obviously you've got to be focused on one of your executives said this, primary competitors. But don't forget that there are a lot of very, very, very energetic upstarts in your core markets that are looking at you and looking at opportunities to either get close to you or go after you. So make sure you find a way to get them close to you so you can control the conversation.
As we jump into projections, I want to pipe in here for 1 second here. And since my background in the analyst firms cover software, services, hardware, any time I see a giant battle like this between SAP and Oracle, I remember going back to Zen versus VMware, in the beginning days of virtualization. the easiest winner to call, I'm willing to call a winner on any of these things, is not necessarily SAP or Oracle, but it has ramifications to them. It has to do with the consulting and systems integration arms for a lot of these organizations, because when you see a giant fight like this, there's going to be consulting, systems integration, long-term maintenance, and road mapping that organizations like Accentures and IBMs and PwCs are going to be able to take advantage of. So for the organizations like SAP and Oracle that are involved in this fight, and also the Tableaus and everybody else, this may in a large part be decided by not only what innovations you bring, but also how well you're able to monetize them through your channel and through your systems integrators partners, because a lot of those guys are going to be having some relationships with your customers. So I just wanted to say, anytime I see a fight like this, I'm willing to call it a winner. The winner is the consulting and the systems integrators that will implement whatever you, the customer, wants.
We've been having fun with this over the last couple of weeks. If anybody on the call wants to go deeper on that sidebar, please let us know. We're happy to set up a follow-up call.
Yeah, and I just needed to pipe in on that, because I just think that if we just focus on the technology in isolation, and if either SAP or Oracle just focuses on the technology in isolation, then that's not the right approach. But anyway, I'm going to turn it back to Elizabeth, who's going to go through projections.
Which actually sets us up very nicely for the final for our projection. And we, for those of you that joined us on our predictions webinar a couple of weeks ago, we had a number of these that spanned the full breadth and depth of the software and cloud landscape. But the one that is most relevant, I think, to the enterprise software narrative really is, again, the channel, and we've touched on this a number of times through the call to date. But it's about calendar year 14. It's a buyer's market. End user needs are changing, and those changing needs are really challenging both vendors and those channel partners, because the channel partners in many ways are as tied to legacy business models as the traditional software vendors, and they have less resources and less ammunition to make those transformational moves. So they're hearing from their customers that the world needs to change. We've talked to channel partners really across the enterprise software landscape, and one of the things that they came back to us overwhelmingly in terms of things they want to see this year are vendors looking outside of incentives and margin to think about outside-of-the-box ways in which the vendor can be a guide to the partner's new path to growth. They want to change, they know they need to change, and a lot of them don't have the first clue how to do it and are scared of the amount of effort they think is involved. On the other side of the spectrum, you've got the enterprise software landscape of vendors. They're really looking at the mid-market as one of those opportunities to really turn around this narrative of lagging top-line growth, and it's going to be a land grab. I mean, it's a buyer's market for those mid-market customers. It's a buyer's market for those mid-market partners, and it's going to be those customers' needs and wants that dictate who has the early advantage. But for those partners, for those vendors rather, that can invest in those partners and show them a path to thinking differently, a path to bringing new offerings into those customer discussions, it's going to take near-term investment, and candidly, when we look at the profitability in this landscape, a lot of the vendors that we cover don't have the ability of an Oracle or an IBM or a VMware rather to pivot $1 billion on a dime. So it's how do you leverage what you're already doing in terms of spend? How do you continue to think about organizational changes as a way in which to increase agility, increase the speed of execution, to keep your partners loyal and engaged as everyone thinks about a new and changing world for enterprise software and enterprise applications. That's really what we see in terms of the first half of 2014, right into the summer, as the way to set up for full year, high single-digit top-line revenue growth. Keep your channel close, because if you don't, your competitors will.
And so at this point, I think we're going to turn it back to Allison, and I see that we have 2 questions in the queue at this point. So if there are any more, please feel free to blast them in. But Allison.
I particularly want to see someone challenge Matt's predictions. That's what I'm waiting for. So the first question we have, in the intro you mentioned we were entering a period of divergence between developed and emerging markets. From the developed market perspective, how do you see this divergence affecting how software vendors are going to market?
So I'm going to take an initial crack at this, and then I'm going to pass it over to Elizabeth. I think that when you start looking at the difference in terms of software buys from an emerging market versus a developed market perspective, in a developed market, you tend to have a lot of the horizontal and the big applications have already been deployed. I don't know too many enterprises of 100 employees or more that don't have a CRM system. So for those organizations, you're really looking at a lot more in terms of what are the incremental adds, and that can be from a financial perspective in terms of a per seat basis, a pay by the drink basis, any type of different ways to purchase and procure software, taking advantage of, balance sheet and income statement approaches, fixed to variable cost, all those kinds of things. But it's also about incremental functionality in terms of bringing analytics in, because if I can just get a little bit more out, developed markets, while I think will be better in the future, you're still not going to see them grow as fast as emerging because the base is bigger. So it's much more about incremental efficiency. And so I think that you'll see the software vendors focus more on what the incremental value add is. So with that, I'll turn it over to Elizabeth.
So from the market perspective to the execution perspective, I think you saw a lot of vendors in late 11, early 12 really looking at how do you scale infrastructure in such a way as to cost effectively reach into a lot of those high growth markets, China, India, even Singapore and Malaysia. And we're really looking at a very diverse approach to keeping that momentum going. From Red Hat partnering with Avnet for broad-based distribution in Malaysia to SAP moving a significant portion of its support organization into China and keeping a significant executive presence there while building out relationships with firms including China Telecom. I think there still remains growth to be had in these markets regardless of segment. And when we look at the enterprise software landscape, we really look at it, though we show you all top line using this benchmark, we look at it from three perspectives. Applications, which obviously industry business applications, business intelligence. Technology, which is databases and middleware in significant margin. And then systems management, which is, I won't call it a catch-all, but it is the most diverse of the buckets, covering everything from management and orchestration tools all the way to the hypervisor. And there remains a very distinct wave of adoption for all of those segments, and each of them is at a different wave of maturity. I will say that I think the infrastructure folks have really been a big focus in the mature markets, and I expect to see some more significant upticks in the high growth markets across 2014.
Great. We have one other question in queue, so if there's any additional questions out there, please send them through now. Next question, guys. Mobility is about having the right information in the right context regardless of the device. However, there is not a lot of innovation coming out of one of the most dominant mobile companies, Apple. Given that, do you think that software developers need to focus on Android first and Apple second?
So I'm going to take another crack at that as well. As consumers and as individuals, we care passionately about our devices. We need to have the device that we want. There are very clearly Apple people, of which I am not one. Personally, I'm a Samsung guy. But interesting, I'm the only person on my team that is does not own an iPhone. So I think that while you are seeing Apple's market share slide, and there is a lot of articles in the press right now about a lack of innovation associated with Apple, and I think their shares are getting tagged pretty badly today, probably off around 10% in that neighborhood. I think that as you go forward, the software developers can't just sit there and think, well, I'm going to do Apple first and then Android. I think you're in an area where Android and the Samsung phones and the other LG phones and the other Android operating systems are going to be just as critical, because this is not I'll develop it on the iOS platform and then see if I can migrate it to something else. From your perspective, from the software developer perspective, you need to be able to approach everybody, and the mobility world is no longer dominated by a single player. Apple may have the biggest installed base, they may not, I really don't know, but I can tell you that if you narrow yourself down to any one platform, you will be in trouble in the long run.
Just one way in.
Well, we have a nice battle. Matt and I share an office, and I have both the Surface and the iPad, and he teases me that I'm hedging my bets. So
you are hedging your bets.
So when I look at this world from the developer-led perspective, and I'm thinking in particular about the outreach around the end user, and this is where I think VMware is really getting it right around thinking about end user development from a management and orchestration point of view. I think for the application vendors, the value prop is clear. Keep your application moving, but for the infrastructure vendors, the ability to tell a story about managing from the data center to the device with a clear, seamless path, understanding the needs of developers without burdening IT with additional complexity, I think that's a winning formula for 2014. And I think when you look at VMware's last 18 months around the divestitures of a lot of the more application-led sides of the end-user computing portfolio, bringing in Sanjay Poonen, who really understands, I think, how to run that horizontal organization, and then taking an acquisition like AirWatch and tying it into the Horizon suite, that's where you really start to come up with something that is incredibly transformative, not only for your own business model, but for your customers and in taking your customer base to its own next wave. VMware, I think, since its inception, has really been a company that's known how to be at least a year or two ahead of its customer base. And I think this is one of those cases where the time lag in terms of how ahead of how ahead of its customer base VMware is closing. That's not because VMware is slowing down, it's because the customer base is speeding up. So right buy, right move, right time, and I think the idea of the development agnostic system really pivots across the whole landscape.
Yeah, and from an application software vendor perspective, you have to have all the bases covered. This is going to be obviously more challenging for the infrastructure vendors, but the apps vendors are probably going to need to be there as well. And with that, I will turn it back to Allison for any final questions and wrap up.
Great. So it looks like we don't have any additional questions in queue now, guys. But if there are any questions out there in our listener base, please send them through now. We'll either address them here or we'll follow up with you individually. So with that, I'd like to thank both Elizabeth and Matt and everyone for joining us today. You can follow Matt, Elizabeth, and Twitter at the handles listed here. And I've also included the social media links for SlideShare and YouTube to check out this presentation and any of the others that we've posted. As always, before you sign off, there's a quick survey that if you have the time and the inclination to fill out, I encourage you to do so. Was this presentation valuable? How good were the presenters? And are there other open-ended feedback you'd like to give us, whether it's the topic, if you'd like to see more depth into a certain area, if you'd like to have Matt tell more jokes, any of that, please let us know. So with that, I'll leave the chat function open for another few minutes in case there's any last-minute questions or follow-up requests. And if we don't talk to you now, please stay tuned for additional webinars coming both this quarter and next. Have a great day, everyone, and looking forward to working with you in 2014. Thanks.